Welcome, everyone, to the Firing the Man podcast. On today's episode, we are joined by Ron Parisi, CPA JD. Ron is dedicated to utilizing his 25-plus years of accounting and tax experience to assist other entrepreneurs. Ron's accounting and business insights have appeared in the Wall Street Journal, Accounting Today, and other national publications. As a senior executive, Ron built a multi-million-dollar national book of business based on his accounting and tax experience and its relationships to modern business landscape and risks. Welcome to the show, Ron.
Hey, pleasure to be here, guys. Thanks a lot for inviting me. And, again, just, for your listeners out there, just trying to, deliver some value to them, trying to put some arrows in their quiver as they go about, operating their business every day, and just, educating them a little about the accounting and tax world that we live in every day, right? So.
Well, very nice. Well, first things first, tell us a little bit about yourself and your story.
Oh yeah, sure. I'll try to keep this short. I always look at myself. I'm a kid from New Jersey. I grew up outside of the Big Apple of Manhattan, and went to school for accounting. Accounting has always come easy to me, and tax. And started off in the New York area with a big four accounting firm, PwC. I worked both in their audit and their tax departments. At a certain point, left there and took a right-hand turn and went to law school. And little trivia fact is our newest Supreme Court Justice, Amy Coney Barrett, was my classmate at Notre Dame. So I was really impressed. Hopefully you guys were too, with her delivery there at her confirmation hearings. But so I went to law school, practiced corporate and tax law, and essentially ended up, with a large company, and managed 35 people, budgets, things like that, and brought me out to the Bay Area, California. And 6 years ago, I decided I was going to give all that up, and I now own two accounting firms, and the one we're talking about today is CPA on Fire. It's a virtual CPA firm dedicated to online businesses. And what motivates me, like my why, I was just talking to my staff about this, is I love working with entrepreneurs. I love the fact that people are out there making something out of nothing, and just contributing to society. And I look at our role at CPA on Fire. We say we're the VCFO, Virtual CFO Services for growing online businesses and entrepreneurs. And what that means is the biggest hurdle that I see with entrepreneurs and why they aren't as successful as they possibly could be, and that's the regulatory environment here. You grow to a certain size, for e-commerce, you got to deal with income taxes, sales taxes, local taxes. You want to bring on staff, right? Whether you're an independent, you hire independent contractors, employees, all of a sudden you have payroll taxes. There's a lot of complexity, and what we try to be is the who, right, for their financial operations. Like in my world, it would be perfect that we could work with as many online businesses as possible, allowing them, right, to use their unique skills to sell their product or services, and really sort of offboard all of the complexity of their financial operations, right? And then in addition to that is just giving them the tools to be successful. Not only, our team, we're not just accountants per se. We're also, really strong analytical people. And, with technology today, we're able to see, how these companies are performing, really take a deep dive and looking at the profit drivers of individual companies. So, it's been really, I guess going back to my story. So we've been in, CPA on Fire has been in existence for 6 years. Those first few years were really dedicated to the tax environment. The last 2 years, we really evolved and saw the needs of our clients, and becoming more and more of that virtual CFO for our clients. And not all our clients are on the program, but we're always looking for, there's different packages underneath the VCFO, but we're always looking for businesses that have the opportunity to grow and grow into those packages. And that's kind of like my challenge to all my clients is, hey, I want you to grow into the fact that you need a virtual CFO sitting at the conference room table with you, operating your business, and you know, giving you and taking away the complexity and giving you the tools to run your business, optimally. So I know that was a long one, so my apologies.
No, that was great. Yeah, I like the connection with the Supreme Court justice. It's always good to have contacts in good places, right?
Yeah, I was just saying, right? I don't know if she'll help me with any speeding tickets, but if I have any constitutional law situations, maybe. So.
Right. That's great. Excellent. So full disclosure to the listeners, I've been working with Ron and his team at CPA on Fire for over 2 years now, successfully. And it's been a pleasure to have experts on tax, in my corner and on my team. So with that being said, so my background, Ron, as you know, I've been in a network engineer for about 15 years before going full-time in e-commerce. And taxes is complicated, unless you're an accountant or tax accountant, it's complicated and it doesn't really need to be. So what is one thing that you see, or, your advice to new e-commerce sellers that are just starting? What should they focus on in terms of taxes? The top thing.
Yeah, sure. I think they, hopefully, the entrepreneur is ready to get serious about doing this, right? And I'll be honest with you, we have really successful e-commerce clients that have full-time jobs and do this at night and are just absolutely killing it. It's so I mean it's possible that, hey, this isn't my full-time gig, but either way, you need to be take this seriously. Have a conversation with somebody on structure, and the importance of setting up, whether that's an LLC, corporation, where are you going to be doing your operations? Are you going to be using a third party to handle your inventory? These are all important considerations. Where you live, if you're California or you in Texas, Florida. So there's definitely important considerations. So structuring would be the first thing. And then second is being proactive. Again, there's very little I can do for you, Ken. You and I and my team work with you, right, year round, right? There's very little I can do regarding your 2020 planning and how to reduce your taxes, in 2021 when I'm preparing your return. It has to be, understand that it's a fluid situation, right? That we're tax planning and we're also planning for, your tax liabilities. Cash flow is a huge situation or a huge issue for startups. And man, horror story after horror story come April, and they realize what their tax bill was or is, and where that money went. And we've had some we were just talking with a client, really some horror stories about how to get back on their feet after getting that large tax bill that first year, not understanding the true taxes that go into that. So hopefully that will help. Hopefully help some startups, and so it's structuring and being proactive with your accounting professional.
Very nice. Now, Ron, 2020 has been an odd year with the pandemic, and there have been a number of different government programs, the PPP, the EIDL. And so what are you seeing with some of your clients, now as some of these programs are in the rear view mirror as it relates to forgiveness or perhaps a PPP round 2? What are you seeing there?
Yeah, sure. So, unless you're, abundantly successful in 2020, I would suggest people reach out and get the PPP, the original PPP. The original PPP loan, even if you're a Schedule C, sole proprietor, you're still eligible for, some form of PPP. And what this last round in December came out, that if you have a PPP loan under $150,000, the forgiveness, wouldn't say it's automatic, but it's darn close. It's a one-page forgiveness application, and it just says that you intend to spend that money either on payroll or related activities, and there's a certain percentages. But essentially, that's free money for business owners and that own businesses, and that I jump up and down to tell my clients to go out and get the PPP loan. The talk of the town right now is PPP version 2, and so the Treasury and the Congress threw in this little caveat that said you got to look at quarter to quarter, 2020 to 2019, and you had to essentially, to be eligible for the PPP V2, you had to have a drop in revenue of greater than 25%. And a lot of my clients, if you're in the e-commerce business, even in any online business, very, very few of my clients actually are eligible of that. That's a pretty big drop, one. And two is, I've seen a general increase in e-commerce clients and just general clients all over on the online space. Did terrific in 2020. So I'm not seeing so much activity with the PPP V2 because of the hurdle. And then let's just switch over and just, you guys please stop me if you have any questions. On the EIDL, there's a lot of confusion on the EIDL, the way it got rolled out. So essentially there was an advanced quote unquote grant that was anywhere from $1,000 to $10,000. And that kind of came and went, and that was an advance, non-taxable. And I don't, at least as far as I know, that program's been shut down. But there's one thing that I think that, entrepreneurs should think about, and that's the EIDL loan. I like it because it's a 30-year amortization period, so you got 30 years. The Treasury takes care of the first 6 months of interest payments, and that the interest rate's 3.75. So it's pretty good. If you are looking for some type of credit, it's a pretty darn good vehicle to go out there and to get. Application process is pretty simple, straightforward. There's some criteria that once you get the loan, that the SBA can tell you how much money you can take out in distributions, and you can loan yourself from the company. You definitely need to walk into this with your eyes wide open, but it is a pretty nice vehicle to be able to finance if you're looking for financing for your company. And that's the EIDL. The application process is still open on the SBA.gov website. So just flip over to the taxability, right? So ABC Ecommerce company, received a $50,000 loan under the original PPP plan. Essentially, what Congress clarified is upon receiving forgiveness, there's a lot of questions whether what was going to be tax deductible and what wasn't. So essentially, that $50,000, it's been now ruled that $50,000 is non-taxable. That's huge. So we have a lot of clients that received $150,000 plus in PPP money. Now all of a sudden, there's no tax on that money. So it was a huge win for folks that received the PPP. And at this point too, the PPP version 2. So if you're able to demonstrate that you were negatively impacted in 2020, and you're eligible for the PPP V2, that money is also tax free. Yeah, sorry. I was just going to mention one other thing. That grant money as well is tax free.
Very nice. I've got two follow-on questions about PPP. A lot of our listeners are trying to grow and scale their e-commerce business to ultimately fire the man, right? And one thing that we've talked a lot about on our show is to delay. The longer you can delay paying yourself, the more money you can bootstrap into growing and adding more products and perhaps hiring somebody. And I can say in my own business, that was true for the first 3 years, was I didn't take a penny out of the business. And so for people like that who don't have a payroll expense, how can they leverage the PPP loan? And the second thing is, I've heard a lot of people say the money ran out. And you had mentioned that you could still apply for it. So can you comment on that as well?
Yeah, I was gonna say, certain things change every day. So, when we're talking today, it might change tomorrow. But from my understanding is that the PPP, original PPP is still available. And that before you apply for the PPP V2, my understanding is that you should apply for the first version. And that may not be correct at this point in time, but at least when they rolled it out, that was the understanding. But the one thing I tell you, since April of 2020, you got to be flexible, and you got to understand, it's a day-to-day situation. And just to address your first question, and that's, okay, I don't have any employees and I don't pay any payroll. Am I eligible? And the answer is yes. So if you are a Schedule C or you don't have any employees at this point, you're still eligible, and they basically marry that, figure how they base the PPP loan amount on your net income. So, we're seeing, we saw a lot of, solos go out there and receive PPP money, and there's special rules for those guys, but it's definitely possible, and you should apply for it.
So, Ron, I've got a couple of follow-ups on that as well.
Sure.
So for the two of them, so one, if you took a PPP loan on the first round, do you have to have that forgiven before you can get in on the PPP version 2? And so the second question would be, so I know we're mainly discuss online businesses and e-commerce. So what you're saying, to qualify for the version 2 of the PPP, hypothetically, let's say I have an online business and I sell neck pillows for flying, right? And that's my only product. Well, my revenues would drop by, say, 75% in 2020 versus 2019. That would be the type of business that would qualify for the second round?
Yeah, absolutely. Yep.
Okay.
Yeah. So you got to look at, quarter to quarter. Unfortunately, it's not any 3 quarters. It's actually calendar quarters. So you got to look, what revenue you did in 2020 first quarter compared to second quarter, and respectively the rest of the year. So, but I'm sorry, Ken, I kind of missed your first question. What was your first question?
Yeah. Sorry, I jumbled them together. That was my bad. So, so if you took a PPP loan,
Okay.
if you took a PPP loan on round 1, do you have to have that forgiven before you can get a loan on PPP round 2?
No. So you just have to have the intent that you were going to use the money accordingly. So with the original PPP, I believe at this point it's 60% on payroll, 40% on other expenses, which would be your mortgage interest, your rent, utilities, things along those lines. So as long as you have the intent to use that original PPP money and you have the ability to use that on those expenses, then you're eligible for the version 2. Yeah.
Okay, excellent. All right, let's get back into some tax stuff here. What is one of the top tax write-offs that is overlooked?
Yeah. Well, I always like to answer these questions like, let's just talk about, first of all, what's the biggest place people miss deductions? Organization. I mean, when you're starting off, and I know, hey man, it's life. We're starting off, you're using your personal credit card, you're using your business credit card, you're using, different accounts to, push money and acquire, get money or get credit for, your inventory orders, or to pay, your search or your Facebook ads. Like, you got to get organized, and, the IRS will tolerate a little, cross pollination between personal and business. But once you get to a certain place, you need to have a business credit card, you need to have a business bank account, and you need to operate as if it's a business. But I find like when people start off, man, at this organization, we miss a lot. So it's important, to get things under control. And I understand you're working and you're trying to start it off, but man, it's nothing worse than leaving money on the table and paying additional taxes you didn't need to pay. I guess one, but two is when I talk to entrepreneurs, man, everybody wants to talk about home office and travel expenses, a little less 2020, and entertainment and meals, and I find that people are really on top of that. You gotta, you have to have, I don't know, somewhere along the line, oh, this is all business write-up. There's definitely, by having an accountable plan, you can deduct, certain expenses for yourself that relate to the business. So I find that most people, where it would be like looking at like meals and entertainment, home office, like they're pretty, we just have to direct them and help them, be organized and be able to, have those and know those expenses and be able to present those to the IRS. But the last thing I think is where people are missed if a new client comes to me is healthcare, and we all know how expensive healthcare insurance premiums are. You both as a S Corp owner over 2%, as well as a Schedule C filer, you're eligible to deduct your healthcare premiums, and this has nothing to do with Schedule A. And for those who are not, technically or don't know what Schedule A is, Schedule A is the, standard deduction versus itemized deduction. And, with the standard deduction being so high, $12,000, $24,000, a lot of folks don't qualify to write off their medical on Schedule A. So this is a really good way. Hey, if it's $6,000, $10,000, $15,000 a year, that's a full deduction on your tax return, and something that folks need to be mindful of.
Okay, so to sum that up, you would say the structure and being organized right out of the gate is probably the top one, and then kind of health insurance a close second.
Yeah.
Awesome.
So Ron, a lot of our listeners are just getting started with their businesses, and we often get the question, do I start as an LLC? Do I start as an S Corp? And I know every situation is a little different, but can you give some general guidance there? And also answer the question why there are so many corporations registered in Delaware.
Yeah, right.
What's that all about?
Now it's the hot area is Wyoming.
Okay.
Yeah. But a couple things is, you got to look at the intentions of the business, right? If you have the intention, you're starting off, you have the intention that this is going to be, you are going to make a go of this. I tell people start off with an LLC, and your listeners need to be mindful. Like when I say start off with an LLC. There's two ways of looking at LLC. One from a legal perspective, and then one from a tax perspective. Okay, so I tell people to organize as an LLC. In the eyes of the legal world, the court system, you have to look at that LLC as a third person in a chair when you're meeting with me. So there's the owner, there's the company, and then your advisor, right? And that's how you need to look at that LLC. When you're 100% owner of that LLC, for tax purposes, it's called a disregarded entity. So essentially, there's no difference between you and the company in the eyes of the IRS. So you got to kind of look at that from two spectrums. I think my clients have a hard time understanding that perspective. So you basically start off and organize as an LLC. And, I see the reasons why, particularly on a corporate side to organize in Delaware or from an asset protection. A lot of my larger clients are reorganizing in Wyoming. But, for me, when you organize or when you start off, I would just organize your LLC right in the state that you live. If you're going to be there temporary, okay, maybe you start thinking about, different states. But I mean, if you live, I'm in Ohio. If I live in Ohio, I'm pretty much going to organize my LLC in Ohio. Without getting too legalistic, I mean, you still have to register with the state and as you're doing business in Ohio, even if I organize in Delaware. So there's still, in California, a lot of people try to escape. There's $1,000 fee every year for having an LLC in California, and people are like, well, I'll organize it outside of California. I mean, California is wise to that. You're still going to be responsible for the $1,000 if you live in California. So, and you're doing business in California. But I guess at the end of the day, I think that folks should look at organizing as an LLC. You have the legal perspective, the IRS perspective. As far as an S corp, people just jump into the S corp. I think that again, you got to talk to an advisor. Talk to CPAonfire.com. You can talk to us, or you can talk to your own financial advisor. There's a lot of understanding about S corps, and I think people kind of knee-jerk react. Okay, I'm big enough. I'm going to be an S corp, and so be it. And then in 2 years, they find out that was a mistake because whatever their plans are, whether it's an exit strategy, a merger, things like that. So before you make what's called the S election with the IRS, definitely talk to your advisor on all the implications and what you want to do. I mean, I have a lot of clients that want to build brands. That's their business, right? It's not necessarily an e-commerce brand, business. It's a brand building business, and then they flip it and sell it, and then they start up another brand and they flip it and sell it. So there would be a perfect example. Hey, let's just think about what we want to do as far as structuring as an S corp. And then I know you didn't ask me about this, but I'll still answer it. And that's the C corp. And I get a lot of questions about C corp. The one thing, the C corp, if you have a Canadian investor or a European investor, or maybe you don't have status here in the United States, but you want to operate a business here in the United States. That's where like the C corp comes into play. And there's also other tax strategies with a C corp, but just to be mindful of that. If you are anticipating getting some foreign money as investors, owners, really the S corp is probably not the way to go. So.
Interesting. Okay, yeah. That's great. So Ron, earlier we talked about kind of the number one way to save on taxes. I'd like to dig into a little bit more, maybe some of the hidden ones that, and specifically for like online businesses and e-commerce, say you're selling physical products on Shopify or Amazon or, omni-channel. Now, what are some of the ways to save on taxes specifically for e-commerce sellers that maybe, people aren't aware of?
Yeah. One is just in general, is that this may not just pertains to all online businesses, is that I see folks are missing what's called the QBI, the Qualified Business Income Deduction. That's a 20% income tax reduction. And I just picked up a new client where their CPA just completely missed it. So that's something that you really need to be cognizant of. It's a huge deduction that came out of the 2018 tax changes. So again, that's the QBI deduction. Super, super helpful for online businesses. The next is, for e-commerce, getting control of your inventory. And that folks have kind of lost their control of their inventory. And hey, if you don't have the inventory, that's a write-off, and that can be deducted on your tax return. And I see that 5 years they haven't done a true up on their inventory. They're carrying this huge inventory balance. These are opportunities that you can take current year deductions on the e-commerce. So having a really current inventory balance is super important. I don't know. Do you guys see that with your own businesses and how easy it is to lose control of your inventory?
I'll tell you. So I actually just last night did an inventory count. Most of my stuff is at Amazon warehouses, so I can pull reports and everything's pretty organized. But yes, I have about 40,000 units in my basement, and it is not clean. And so, but and I guess we're recording this at the end of January. So approximately at year end, I'm doing an inventory count. I was about 25 days late this year, but anyway, I could see how that really gets away from people. And then also like obsolete inventory that we're not selling anymore, but we still have on hand. I could see how that could spin out of control very quickly.
Yeah, and to follow up on that, as I've been scaling around with multiple brands and inventory, and I think 4 different locations now between Amazon and a 3PL and Walmart and my own warehouse. That is a constant challenge to manage inventory in an omni-channel e-commerce business. And so you're saying do a true up, find out what you have, and then if you're holding some on the books, it can be a write-off in terms of like, hey, that's lost or damaged or whatever.
Yeah, I mean, David brought up a perfect example: obsolete inventory, right? You have version 1, now version 2 came out, and nobody wants version 1. What are you going to do with that? And sometimes you can maybe get some scrap value for it, but otherwise, if you got to eat that, let's get that deduction today, not tomorrow. So what happens is, I mean, hundreds of thousands of dollars, I feel like, could be, it depends on your size, obviously, but could be written off today, and that just kind of carries over in that inventory balance every year, and they never true it up, and they just carry it, and they end up paying today's taxes. I mean, when you pay, you got to look at this. I mean, you pay taxes today, right? That's cash flow that you could be reinvesting in the business tomorrow, right? So that's huge opportunity cost. Not only is it, people tell me, well, I'll get that eventually. I mean, this, cash is king. If you truly believe in your business, you need every dollar to reinvest in that business and to grow it and to scale it. So I'm a big believer in, just being really mindful of your tax liability, understanding your cash flow, and then utilizing that money, and David's brought up, hey, he didn't take any money out of the company the first 3 years. It's constant reinvestment because you believe in the business model, you live, and every dollar you reinvest in that business, how much is that going to grow? Is that 300%, 500%? These are numbers that you should have some type of prediction for. Okay, so every dollar I invest today, over the next 3 years, what can I do with that dollar as I keep on reinvesting it in the business and giving me a return on that? So maybe that $1 is going to grow $10, $20, $30, compound concept of money. So.
Nice. So as a wrap up on those, talk to your tax professional about QBI and do an inventory reconciliation. And those are kind of 2 low hanging fruits there.
Yeah, monsters. Yeah, absolutely.
Perfect.
Yeah.
Let's talk a little bit about sales tax, and we don't need to dive too deep on this, but again, I'll use my business as an example. Amazon is, my understanding is they're collecting and taking care of sales tax, and so I really have not done anything as it relates to sales tax. And I know a lot of our listeners are probably in the same boat. So what would you say, what general advice would you have as it relates to letting Amazon handle it versus, applying for state nexus and doing it yourself?
Yeah, I think that, like in your case, right, you're a 100% Amazon seller. It's a no-brainer. Let them handle the sales tax. There's a law out there. It's called the Marketplace Facilitator Law, really requiring folks like Amazon and Walmart to collect sales tax. And it's you gotta look at it from the state's perspective, right? The state doesn't want to track down every e-commerce seller in the country. They would rather go and hold the big companies responsible. So if you're 100% Amazon e-commerce, they're going to withhold the sales tax for you. Where people really get themselves in trouble is they got Amazon, Shopify, their own site. Maybe they even have a brick and mortar store, and man, it's tough to track all that, because then all of a sudden these foreign words of nexus come into play, and how many transactions are you doing in the state? Where is your inventory being? Where's your third party? All those questions now need to be answered, and now you have to go out and you have to apply for applications in those states. You have to withhold. You have to set up your Shopify correctly. So, it gets really a little wild at a certain point. And there's I direct people. Obviously, we don't have the technology to do all of this. I direct people to whether maybe TaxStar, or there's two other that we recommend for people to kind of help them manage the sales tax process, because it can get a little unruly if you have multiple channels of what you're trying to sell. So.
Boy, am I relieved to hear you say that. I know I've got, I'm not sure how many states, but I know it's in the double digits in terms of where my inventory's at. So we'll just continue letting Amazon take care of it. That's nice.
Yeah.
So one last question before the fire round is we have and this was the case my first year. I didn't make any money. And I hear a lot of people say, I didn't make any money this year, so I'm not going to file a tax return. And can you talk about what these people are missing, or why you may want to file a tax return even if you didn't make any money?
Sure. Yeah. Well, I mean, other than you're required to, but let's just talk about losses. IRS has a term. It's called net operating loss. So when you have a loss in your business, you can do some things with it. And again, the IRS has kind of loosened up the rules on this a little, but you can carry that loss back 5 years, or you can carry it forward. And that by you not recognizing that loss on a tax return, you're not going to be able to utilize it. So let's just take, Ron Parisi Industries, right? I go out there and, after everything I did, really trying to market my brand and have some expenses out there, I had a loss of $50,000. Okay. So what does that mean? And I just started. I just graduated college. Now I got a loss of $50,000. I can carry that loss into next year, right? And now all of a sudden I made $150,000 in year two. Instead of paying taxes on that 150, I can carry that loss forward and just pay taxes on 100,000, saving myself, a good chunk of change on that $50,000 loss. So that would be your number one reason to file a tax return. Create the loss on your IRS transcript, and then utilize that loss going forward as your company starts spinning off a profit. So.
I'm glad that you started that off with you're required to, because often people talk about it like it's a choice, an elective decision to make, and that's I'm very by the book as it relates to this type of stuff, and so that's often my response as well. And your comments on that operating loss, I mean, that's really can be an asset in your business, right? An asset that you carry forward to offset future tax deductions and future cash outflows to the IRS. So,
one other thing that I think people forget is that all the costs that go into, researching and, taking classes, whether you buy something, class online, and maybe you've incurred those costs, right, in 2020, but you didn't launch your business to 2021. Those are what's called startup costs. So we need to track those, and we need to, the first $5,000 is written off in the first year, but then you can amortize the rest. So again, you don't necessarily need to have a business before you can start planning for tax deductions. So.
Awesome. So just as a follow-up for all the listeners, filing a tax return is required, not optional. Right. So, all right.
I tell you, Ken, you don't look too good in orange, buddy, with that hair.
Right. So going on to the fire round.
Sure.
Are you ready, Ron?
I think so, man. I think so.
All right. What is your favorite book?
Oh, wow. Okay. My favorite book, Confederacy of Dunces, by Jonathan Kennedy Toole. Super, super funny book. Classic.
Awesome. I'm going to have to put that in the list. What are some of your hobbies, Ron?
Sure. Yeah, something you probably wouldn't realize. Like, obviously, I'm a desk jockey, but I love the outdoors. Love to hike. Grew up on the New Jersey shore, and yes, there's waves. Grew up surfing when I was a kid, and surf a little now. And but anything outside, anything to get me outside, hike, swim, things like that. So
Nice.
yeah,
2020 is a good year for that, right?
Yeah, exactly.
All right. The last one we have. What do you think sets apart successful e-commerce entrepreneurs from those who give up, fail, or never get started?
Yeah, I know. Wow. It's weird because I'm going to say something that everybody's heard before, but it's so damn true, and that's mindset. Um, I cannot tell you. It's so funny as I interview prospects, that want to work with us. I can almost instantaneously tell whether they're going to be successful or not just by the language they use, what they have. The person that comes to me and starts telling me about the tax laws is maybe somebody that's not going to be successful as they could be. And I don't mean that in a bad way. I mean that you need to spend 98% of your time growing your business. Don't worry about the tax laws. Don't worry about this. Don't worry. Grow your business, right? Manage your business, understand your business, do everything in your power to grow the business. And with that, like, man, I just sat through kind of a futurist conference, right? And they're talking about these emerging technologies, both energy, food, medical. I mean, the future is so bright, has so much opportunity to grow. Don't let 2020 slow you down. I mean, the next 10 years, from our, what we're doing, we're marrying accounting services with technology, right? That's analytics, technology, accounting, tax. Um, the next 10 years, I tell people, are going to look nothing, in 10 years, going to look nothing like today. There's going to be so much opportunity for people, for entrepreneurs. We hear about disrupting. I mean, man, the future is unbelievably bright. And don't let 2020 get you down. Fire back up. The future is incredibly bright from Ron Parisi's position here. So.
Excellent advice. Yeah, mindset is huge. And for all the listeners, we did a recent interview with Joel Bauer, and it was specifically on mindset. So go take a listen to that one. It's definitely worth the time. Excellent, Ron. So David, you want to wrap up the show?
Yeah, absolutely, Ron. If people listen to this, liked what you had to say, and want to get a hold of you for your services, how can they do that?
Yeah, I was going to say the easiest way to do it is hop on our website, www.cpaonfire.com. And, we have an opportunity for a free or complimentary financial review of your business. We spend a relatively short time, but man, they are productive just to kind of reset both the prospects and people who just kind of want an independent thought on their business. And then, I just wanted, I guess, we're going to be launching what's called the Prosperity Report. It's really a roadmap for e-commerce and online businesses, and that's going to be coming out shortly. So if you put in firing demand in the little drop-down box, we'll ship that out to you shortly. It's coming out in print in the next couple of weeks here. But we'd really love to, if you see there's an opportunity to utilize our services at www.cpaonfire. Love to talk to you guys. So.
Excellent. We will post all of that in the show notes. But Ron, appreciate your time, and thanks for being on the Firing the Man.